Welcome students. In the last session, we discussed the theoretical part of bank reconciliation statement and what are the causes of their difference. Now we are going to concentrate on the practical part. So let's begin our discussion for the day. To start with, there are four ways to start making a bank reconciliation statement. First, we can start with balance as per cash book. Second, we can start with balance as per passbook. Third, we can start with overdraft as per cash book. And the last is we can start with overdraft as per passbook also. Now to start with, please understand that first and second case are favorable, that is positive balance, and third and fourth are overdraft, that is negative balance, which means favorable means we have money in the bank, that is plus balance, and overdraft means we have negative balance, that is we have drawn more than what we are having in our account. So now we have to give back the money to the bank. Okay. Now when we start, first of all we write the date on which we are preparing the bank reconciliation statement. Like the opening line will be bank reconciliation statement of the name of the company as on which date, and then we start the format. In the first line, we start with balance as per cash book or passbook, whatever the case may be. Please remember, first we are doing favorable balance, and then now we have to look for all those points which we discussed in our last session, that is check deposited but not cleared, check issued but not presented, bank errors, firm errors, etc., etc. All these things have to be added or subtracted. Now the most important question is what to add and what to subtract. Well, this is what the chapter is. If we have started with let us say balance as per cash book, then we will add all those items which have reduced the cash book balance, because whatever has reduced will be added back. For example, check issued but not presented, credit by the bank, etc. All these things will be added back. Similarly, we will deduct all those items which have the effect of increasing the cash book balance. For example, check deposited but not cleared, debits by the bank like interest on overdraft, amount paid on standing instruction of the customers like rent, insurance premium, all these things will be deducted. Errors made by the firm or bank will be added or subtracted as the case may be. Now we will arrive at balance as per passbook. So students, the first thing to understand is the logic of what to add and what to deduct. All those transactions which increase the opening line balance will be reversed, that is deducted, and all those items which decrease the opening line balance will be added back. So this is not important from where and which balance we have started, but we must go by logic. We will reach the other balance, that is if we have started from cash book, we will reach passbook, and naturally if we have started from passbook, we will reach cash book. Now let us do one practical question to check whatever we have understood. Balance as per cash book is given 70,000. Now there are various entries, I am reading it. First point, check issued but not presented 5,000, check deposited but not collected 7,000. Next one, interest / dividend directly collected and credited in the passbook 3,000. Next point, bank charges 500 not recorded in the cash book. Next one, check dishonored in passbook 250 rupees. So, now let us begin with the solution part. Now, please write the first line, balance as per cash book 70,000. You can start with me writing in the book, balance as per cash book 70,000. Now, we will discuss entry by entry and then you add or subtract in your copy. Let us see the first entry, 5,000, that is check issued but not presented, have reduced the cash book balance. When you issue the check, it reduces the cash book balance. So, now what will you do? Yes, add 5,000. So, please put add 5,000. And the second entry of 7,000, that is check deposited but not collected, would have increased the cash book in the first instance. So, in the cash book, now we will deduct 7,000. As for the third entry, that is 3,000 rupees dividend interest credited in the passbook, it has increased the passbook. But wait a minute, we have started with cash book balance. So, let us see the position of cash book, which is less. Passbook is more, cash book is less. So, what we have to do? Yes, add 3,000, because we have to concentrate on from where we have begun. Regarding the fourth entry of bank charges 500, these are not recorded in the cash book. So, it has the effect of not decreasing the cash book, or you can say cash balance is more. So, now we will deduct 500. Now, coming to the last one, that is rupees 250 for check dishonored in the passbook, had reduced the passbook, not the cash book. So, you reduce it from the cash book, that is deduct 250 from the cash book. Now, let us see the final picture, 70,000 plus 5,000 minus 7,000 plus 3,000 minus 500 and minus 250. So, this makes 70,250. So, this is the balance as per passbook, which is the final answer. I hope you have understood the basics by now. Let us do one more, where we will start with balance as per passbook. So, the question is like this. We are given the balance as per passbook 28,000. First entry is check deposited in bank, but no entry in cash book. Oh, there is no entry in the cash book, 2,000 rupees, and we have deposited in the bank. Second, check unrecorded in cash book 1,500, not sent to the bank. Third, bank charges recorded twice in cash book 50 rupees. Next, check issued but not presented 1,000. Next, bill dishonored but not recorded in cash book 2,000. Next, credit side of cash book column totaled short 300. Now, let us start and write the first line, balance as per passbook 28,000, and then first we will write add entries and then the less entries and arrive at the balance of other book, that is cash book. Now, the first entry of 2,000, which is check deposited in the bank, only has increased the passbook. So, now deduct it, because we have started with balance as per passbook, which is more, and if it is more, we will reduce it, deduct 2,000. Second entry 1,500, check unrecorded and not sent to the bank. Now, this has no effect, unrecorded in the cash book and not sent to the bank. So, it is nowhere. So, it is having no effect anywhere. So, this is also an important point to note, sometimes there is no effect. So, no plus and minus for this entry. Coming to the third entry, bank charges 50 rupees recorded twice in the cash book has reduced the cash book twice, whereas passbook has reduced only once. So, let us subtract once more, deduct 50. Now, someone can say why we are subtracting again in the passbook when we know that twice is wrong. So, let us understand one simple thing. We are not correcting, we are not adding, we are not subtracting anything from the books. We are just making a statement only to see as to why differences are there, and the most important thing is how they will be reconciled. Reconciled means only reconciled, not corrected, please. You cannot go to the cash book and correct, you cannot go in the passbook and correct. You are just trying to make a statement and try to find out the differences, why they are there and how they can be reconciled. Okay? So, coming to the next point, number 4, check issued but not presented 1000. It will be deducted because if not presented means passbook is still more. So, now we have to deduct. Now, the next one is point number 5, bill dishonored 2000, which is not recorded in the cash book. It has reduced the passbook. So, now add it. Coming to point number 6, credit side of cash book, that is payment side totaled short. When the payment side is totaled short, it make the cash bank balance more. Payment is less means balance is more. So, now what to do? Passbook balance is less, cash book balance is more. Now, we have started with passbook. So, now add it back. So, add 300. So, the final answer will become 28,000 minus 2,000 and minus that nil effect, no effect entry, minus 50 minus 1,000 plus 2,000 plus 300, making it 27,250 as the final answer, which is the balance as per cash book. So, friends, in today's session we have understood two methods, balance as per cash book and balance as per passbook, which were favorable balance. In the next session, we are going to take some multiple choice question on these 2 points, followed by the other 2 methods, that is overdraft as per cash book and overdraft as per passbook. Till then, I would like you to go through these questions and practice some more. Namaskar.